So we thought of getting you a special voice on this subject. We've got Ajaya Stupnytska, head of global macro investment strategy at Fidelity International. She's joining us all the way from London via Skype. Anna, apologies if I may have pronounced your name incorrect. How are you feeling there this morning? How is the situation in London on ground? How's NHS handling things?
Well, I think the situation is as challenging as elsewhere. London is in the lockdown, and cases are rising, and the NHS is getting under an increasing pressure. Of course, the measures are helping, and more and more people are staying at home. But clearly, this is something that will continue spreading, and we haven't seen the peak of infections yet here in the UK.
Right. Anna, how are global market investors positioned right now? Is there a risk of sentiment? Do you see it continue for a prolonged period of time?
I think we have seen a very fast-paced adjustment in the financial markets over the past few weeks, and the really big moves were related to investors changing their positions, selling out of risky assets, and in some cases out of safe havens to fund their positions elsewhere, moving into cash. Now it seems that there's been a little bit of stabilization, at least on certain days, in certain asset classes. So perhaps that very, very big, fast-paced adjustment is now out of the way. And some asset classes seem to be supported now by central bank interventions. As you know, the Federal Reserve has committed to QE infinity. They have been buying government bonds. And also they started buying corporate bonds. And that's the asset class that seems to be a little bit more stable now. So there is a bit more differentiation in the markets today relative to what we saw even a week or two ago. But I would say the general feeling is still risk-off. In our funds, at least, we are not piling on risk. We are not. We don't think there is. This is the bottom of the market yet. We are being cautious, and that's what I think most investors out there are doing right now. Just a wait and see mode to try to gauge the virus-related uncertainty and its impact on the economy.
Right. Anna, Indian markets have seen huge outflows, 65,000 crore on a net basis last couple of months. FIIs are selling out of emerging markets, and India is also on the receiving end. What are your thoughts when you speak to your peers in the region, or when you are working your numbers? How much more outflows can emerging market as a pocket see in the next couple of months, the way things are progressing in your view?
Yeah, look, I think it's very difficult to estimate, but I don't think we are at the end of it. As you know, the epidemic started in China, spread across Asia. Now it's in developed countries, mostly in the West, but also spreading across the rest of the emerging world. And I think it's only now that emerging markets are facing this dramatic domestic shock, public health emergency, and at the same time, they're facing a very dramatic external shock in terms of the collapsing global demand. And on top of this, we also had a dramatic oil shock. So you have these three shocks working through the system: the virus-related shock, the domestic, the external demand shock, and the oil supply and demand shock. Now, this is a really tough environment for emerging markets. So I think it is likely that we will continue seeing the outflows from the asset class overall over the next few weeks or perhaps months. What I would say here is that I think it's not going to be indiscriminate forever. At some point, there will be differentiation between countries. The countries that have most ammunition, most tools in terms of the policy response, the countries that have strong institutions and they are better equipped to tackle the local crisis, they are likely to do better than other countries. And looking across emerging markets, I still think that Asia, China and Asian countries are probably better positioned than emerging markets in Latin America, for example, or Africa.
London. Right. Anna, we've received a lot of opinion coming in from some of the names globally, like Jeffrey Gundlach, like Howard Marks also wrote a fresh memo overnight. Now, these are people who are very well followed globally, and these guys are sounding extremely cautious. What are your thoughts? But at the same time, Seth Klarman just a week back started buying from the market and taking fresh funds after a 9 years gap. What are your thoughts on how blue-blooded investors globally approaching this sell-off? Are they nibbling in, or are they very cautious on the market?
Yeah, so I think again there is a lot of differentiation, and I think the key aspect to think about is the time horizon. And what I hear right now is that longer-term investors who look to invest over the next, say, 5 to 10 years or even beyond that, they are starting to see attractive valuations in certain pockets in the market. And we have seen a big adjustment, as we've said. And I think those investors find some attractive entry points, perhaps in the debt space, as I said, the corporate bond market, but also in some equity sectors as well. Now, as we hear more of this very scary, I would say, stories, this is mainly for the next few weeks and months. And by the way, I also think that consensus opinion out there is still a bit more optimistic or not pessimistic enough on the shock that we will see in terms of the economic impact, but also upcoming market impact of the next 2 weeks. So I think those investors you mentioned, I agree with them. I think they are right to caution other investors and the market that worse is still to come. Now, if you have a short-term time horizon and you're trying to invest for the next few weeks or months, this is important to understand that the bottom is still not there. But again, if you are a longer-term investor, and these are the investors that we mostly work with and talk with, you're still right to be cautious, but looking at some opportunities in the market where you think valuations are attractive is perhaps something that is the thing to do right now.
Right. All right, Anna, we'll let you go on that one. Thanks so much for joining us on the show today and sharing your thoughts on our channel.